Welcome back to the Stockspot channel. Today, I'm going to be walking through a company that goes by the name of Alimentation Couche-Tard. Alimentation Couche-Tard is a convenience store owner but also a fuel retailer. Starting off by looking at some financial metrics, their market cap as of today stands at 78.12 billion Canadian dollars. Their margins stand at 17.47% gross margin and around 4% free cash flow margin, which is a very good margin for a fuel retailer and also convenience store owner. Their 5-year average return on equity stands at around 23%, and their return on capital employed about 16%. These are my two favorite metrics when looking at profitability, as it gives a very clear and good picture on whether the management is capable of allocating generated funds efficiently and also value accretively for the shareholders. Their valuation, their PE ratio, stands at 21 and EV to EBITDA 12.72. Comparing this, the EV to EBITDA, to the S&P 500 sector average, they are, compared to the consumer discretionary EV to EBITDA and the consumer staples EV to EBITDA, are currently quite a few percentage points under it, meaning the market doesn't value it as highly as the industry peers in those businesses. But of course, in those sectors, there are also companies like Costco, which right now they are valued very, very highly, or Wingstop, or Chipotle, so on and so forth. So maybe that ratio as of right now is a bit elevated. Moving on to the growth. So their 10-year revenue growth stands at 6.2%, which could be higher, but it's still above inflation, which for a retailer to successfully create value long term for the shareholder has to be above it, quite a few percentage points above it. Otherwise, it's destroying value long term. Looking at the diluted earnings per share growth, standing at 14.71%, which is very good. There has been also very nice growth, 10-year dividend per share growth of 23%. Going forward, I don't think that growth is going to be that high. It's more likely going to stand at around 11.19%, which I do see a quite realistic prediction, because as of now, the earnings per share growth has quite slowed down, in my opinion, due to the recessionary environment that we are in right now. Moving forward to the stock price, to the stock chart, we can see that from around 2019 to the mid 2021, the stock hasn't done much, has had problems with COVID. You can see the little bump right after 2022, the COVID valley, let's call it, as fuel retailers have had quite a few difficulties because people had to stay home, not traveling a lot, and people not traveling means bad stuff for this type of company. But after that, after the COVID, it has managed to deliver quite nice stock price action, which resulted in a CAGR return in the last 5 years of 13.76%, which is quite nice compared to the S&P 500 return of the last 5 years. Looking at the balance sheet, I'm going to single out for me the most important numbers right now. So the total assets stand at 50.75 billion Canadian dollars. Compare that to the liabilities, which is far above it. They do have quite a bit of net debt on their balance sheet, but this is normal for this type of business, which conducts a lot of M&A, which we'll talk about later. What their most long-term assets stand in form of net property, plant, equipment. What I do not like about their balance sheet is they do hold quite a lot of goodwill, but that is to be expected with a company that grows by conducting a lot of M&A. For example, Thermo Fisher or Danaher, they do also have quite a bit of goodwill on their balance sheet. Moving on to the cash flow statement. So their cash flow statement, they are capable of generating around 6.5 billion Canadian dollars. And looking at the past year's free cash flow, I think they are able to then generate between 3.4 to 3.8 billion dollars of free cash flow. We can see that during the COVID years or the worst off years, they have been able to have quite a stable cash from operating activities. And in the past, we can also see that they have raised some funds by mostly issuing bonds, of course, to pursue their M&A desires. If you wanted to call them that. Moving on, I'm going to present you one of the, in my opinion, very influential people in this company, the founder, Alain Bouchard. Looking at his Wikipedia, we can kind of skip through the text. What I find most interesting and what I think has developed him as a person, while also looking at the history of the company, has been that his dad owned a road construction business, which went bankrupt, and they had to move to a mobile home. So they had to pretty much live in a trailer park. He worked as a stock boy in his brother's parent milk store, and at some point he was hired by the owner to scout and open stores. He opened a lot of stores. He was very successful, but he thought that the company didn't treat the employees right. So he left and joined a competitor. And at the competitor, he was head of development, construction, and real estate. He grew out that company. During that time, he pursued some educational courses as for business and also English. He made some earnings from his private real estate investment. So we can see he has been quite a good capital allocator, also very hardworking person, working in a nice position, pursuing education, while also making profits of his own, investing them back into his own business, opening franchise stores. And in the 1980s, he started Alimentation Couche-Tard as we know it today. And one of his, in his opinion, the most important thing he has done is the decentralized organization structure, which we can see a lot of business with decentralized organization structures having a lot of success, like Constellation Software, Nucor, Reliance Inc., or also known as Reliance and Aluminium and Steel. All of these companies, they have had a lot of success pursuing the decentralized organization structure, which is also my favorite when looking at companies. And also worth mentioning, in 2003, the company acquired Circle K, which is probably the most influential M&A activity to date. Here we can see their history and also the dynamic growth pattern, acquiring, especially from E&P companies like ConocoPhillips acquiring Circle. Also, their latest worth mentioning acquisition from Total Energies, I'm sorry. So a lot of E&P oil companies, they're disposing of their retail businesses because those have quite low margins if you're operating on a smaller scale compared to Alimentation Couche-Tard scale. They're not going to achieve that. So they're focusing on their higher margin businesses like selling the oil, refining, so on and so forth, and divesting it to get a little cash injection. And Circle K is grabbing all of those businesses up, scaling them, integrating them, creating a lot of synergies, and also pursuing some organic growth plans in order to create even more shareholder value. So I'm sorry, not Circle K, Alimentation Couche-Tard has 16,740 sites worldwide, most of them being located in the US, but the second most they have in Europe and what they call other regions. And also quite a lot of location in Canada as a Canadian company and also listed on the Canadian Stock Exchange. Looking at the revenue and gross profit pie charts, let's call them. So most of their revenue comes from the US, of course, being the location with the most sites. What I want to highlight here, especially on the right side of the graph, so their biggest revenue contributor is their fuel. As I said, they're a fuel retailer. They own gas stations. But when comparing that to the revenue of merchandise and service, so that being any type of car wash, selling them the people's croissants, selling phone chargers, selling drinks, right? That makes only 25% of revenue. But when looking at the gross profit, I'm sorry, but when looking at the gross profit, we can see that the merchandise and service makes way more of that profit compared to the 74% revenues coming from fuel, but only 48% of gross profit coming from fuel. So, what we can learn is that gas stations don't make most of their money by selling fuel, they make most of the money by the people going inside, buying a drink, buying a snack, going back to their car, driving away. Looking at their latest financial performance, it has been quite underwhelming, but I don't think this is coming from a fundamental reason, like the company doing something wrong. We can see the same source sales going down in the US, also the volume. The same happening in Europe, the same happening in Canada. Also here, we can see it in of course, the earnings are going down, the growth is going down a lot. I think this is coming down to the inflation and also the consumer really feeling the inflation, kind of holding back, just like filling up their car and not really going inside and grabbing a bunch load of stuff, which is the main driver of Alimentation Couche-Tard's profit. So that of course hits them when the small consumer, let's call it that, feels the pain of inflation and his pockets getting thinner and thinner. Here we can really see it in the company's earning. But still think the company's pursuing a great long-term strategy. Looking at some absolute numbers, the return on equity and also the return on capital employed, right now they're a little bit below their 5-year average. Of course, they're going down with same store sales and volume going down. The returns on capital are also unfortunately going to go a little bit down. What I want to highlight is, so I've talked about recession, but I'm not really afraid of a recession when looking at Alimentation Couche-Tard. When you look at the growth of same store revenue, yes, it has gone down during 2008, but you can still see it has gone back up quite fast and remain resilient. Also looking at their cent per gallon, which is pretty much their fuel margins, in Canada and also in the US, they have remained quite stable, which that means it makes them pretty much recession resilient, as it says in the title. Moving on to their strategy. So they have, or their growth strategy. So they call it 10 for the win compelling investment opportunities. I have highlighted, in my opinion, what are the, let's say, short to medium term most will be the most contributing to the growth of the company. So I think the financial discipline and cost efficiencies, of course, through M&A and also by only pursuing high return investment opportunities, that will be very important in recessionary environments because then you're going to come out stronger out of the recession, and also the strong balance sheet for M&A ambitions. So when other competitors struggle, they can conduct really nice M&A activities and also maybe buy off some retail brands from E&P oil companies. Sustainability of fuel gross margin also. Of course, they have to maintain margins, try not to go too far down with pricing, try offer some kind of premium experience for the customer so they can maintain those nice margins also during recessionary environments, as we have seen on the last slide. And on the long term, I think they got to step up their untapped organic growth game. They do have some plans how to achieve that. The first one, they call it own first. So as of lately, we have seen brands like Celsius, Monster, and also some brands of Coca-Cola, Pepsi, so on and so forth, have grown really, really fast. The beverage market is going quite well, and they're trying to get a pie of that growth, piece of pie of the growth. And let's cut it down to the most simple stuff. So they're just trying to get a lot of products and also add stuff like vending machines or any type of machines that dispenses some type of drink and trying to make money off of that. Simple as that. Also, their second organic growth strategy is private brands. So private brands can hold quite a nice margin if done well, if you have a cheap cost per product. And also they can make customer spend more time in your store, which results in spending more money in your store. For example, here, like any type of phone holder, phone charger, or like a phone ring, like those TikTok influencers they all have on their phone so they can film better. Yeah, they also want to sell that and also boost their private brands program. Here you can see the bullet points, what they plan on exactly doing on how to boost those sales. What I think, as I said before, I think the M&A activity, the cost savings, cost synergies, they're going to have a great effect. And the M&A market is in a quite nice setup for them. So when looking at the fragmented US market, they provide a lot of opportunities, consolidation opportunities. And as I said in my ODFL video, in my last video about, I do really like markets which present a consolidation opportunity because I think if done right, that's going to make a nice long-term return for the shareholder. And we can see the chain stores have steadily been increasing. The single stores have kind of been struggling over the years. They kind of like go down, go back up, go down, but the chain stores they have been managing to keep growing and growing. And here we can also see a pie chart about the different chain sizes. So the single operated chains have kind of been struggling, which is a good sign for companies like Alimentation Couche-Tard, because that means in the future there will be M&A opportunities or also just in general competition failing and also uh, room for expansion for their own brands. Moving on to the supply chain. As I've said, fuel retailer, yes, they need trucks, they need infrastructure to move the fuel around, store it, sell it. Alimentation Couche-Tard is pursuing a strategic approach to this. So they have partnerships, but also own their own part of their own fleet. They have a few principles, which is focused on product sourcing, conservative risk position, no speculation. So when pursuing M&A activities, which have the goal of enabling their fuel supply chain, they don't do this because of speculation. They do this also because of safety and also being, let's say, more resilient, having a resilient supply chain. As it says in the next bullet point, control of supply chain important, and ownership only where advantaged. So they try to walk on a thin thread of ownership of infrastructure, but also only owning the infrastructure which you really need or which has a strategic importance. Some of their full year 2024 initiatives includes further increasing their supply chain control and while still being able to dynamically re-optimize to the market conditions. As I said, they have conducted a lot of M&A in the past, and I really, really like this slide from their investor presentation. So their strategy is acquire something with debt and also some cash. After they do that, of course, their leverage ratio goes up. But as their growth, especially earnings growth increases, the leverage goes down and also they pay some of that debt down. So their leverage goes around their target threshold. Around 2008, it increased a little bit because their earnings went down. But as the earnings went back up, were stabilized, and also paid off some debt, they eventually reached their target threshold of 2.25 leverage, 2.25x leverage in 2011. After that, they kind of hit the gas with acquisitions, buying a lot of stuff. SO, I think from ExxonMobil in 2018, quite a nice acquisition. Also buying multiple type of fuel retailers. After that, they waited, growth, organic growth, pay down debt, and then went again on a shopping spree with their most recent acquisition, notable acquisition, let's say, being Total Energies. And also they bought some car wash stations because they think it increases their reach to customers, which as a fuel retailer, indeed, it does make sense to acquire a car wash station. One of the risks, of course, as a fuel retailer, is your customers switching the propulsion system from fossil fuels to electricity. But as of now, Alimentation Couche-Tard has a strategy to capture the growth of the electric vehicle transition. Right now, in Norway, they're doing a lot of experimenting with this electric vehicles transition. As you see here, Norway as a lab, they have had success because people they load their car. Usually, an EV needs around 20 minutes to 30 minutes to have an 80% charge, battery charge. During that time, you do have to do something. Either you stay in your Tesla and watch a movie or something, play some games, or in those 20 minutes, 30 minutes, you walk inside the convenience store and buy yourself some snacks, get yourself a drink from the automated dispenser, grab yourself some croissants, and then you go back in your Tesla, play some games while snacking away, right? And as I said before, that's their biggest profit bringer, the merchandise, be it the private brands, the food products, the beverages. Which, if they manage to capture people in that way, also have a cheap supply of electricity in which they can still generate some margin or go down on the electricity margin, on the charger margin, but having good margins on the food, that is still a nice sum game compared to the traditional fuel retail business. Here you can see what a typical charging station in Norway looks like. To the left, you have some Tesla superchargers, and there you have also some Circle K superchargers. We're going to finish off by looking at their strategic plan for the future. Well, not their strategic plan, their financial targets for the future. So these are the reinvestment rates they plan. They plan to invest around 35 to 40% of EBITDA. And for network development, commercial programs, same business, emerging business and innovation. Right now, as I said, their ROCE is a bit depressed, but they target a long-term 15% ROCE, while also pursuing financial discipline and rigorous capital allocation to ensure quality investments. If you're not being careful with your cash, especially in a recessionary environment, when coming out of that recession, you're not going to have a 15 ROCE. That's really, really important for them. And of course, maintain a nice conservative leverage, because if there's a recession, your earnings go down, your leverage is going to be off the roof, and all of a sudden you're going to have problems paying that debt back. And that's the moment when you're not creating value for the shareholders, you're creating value for the bondholders, like, for example, known bond investor Mark Howard. And also, they try to pursue buybacks, which have been good the last 5 to 10 years. And also keep increasing their dividends. I don't think they're going to keep increasing them at a 26% CAGR, as I said in the beginning, but I do think there's at least a 10% CAGR increase, in my opinion. This was it about Alimentation Couche-Tard. I really hope you enjoyed my video. And as always, this is not financial advice. It's only for educational and also entertainment purposes. This was it from StockSpot, and catch you next time.